Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's do a bit of a master mix today of Setup Sunday, Macro Monday, and everything else in between. I wanted to talk about my trading portfolio mix first, which is 80% cash effectively here. Buffett and I have a lot in common. We're very cash heavy at the moment. Most cash I've ever had in my life, not because I turbo bearish 2025, not because I don't think the cycle's over or anything like that. I just think down makes more sense than up here. In the early parts of Q1, I'll give some levels. I like anything below 90K on BTC. Anything near 80 is amazing. ETH, 2800, potentially. I also have tax considerations to think about, as do many people who've had a great 2024, and I'll also be sending a chunk of this to the hedge fund I help manage at Canary Capital. If you're an accredited investor and interested in that, you can email me, Josh@Canary Capital, going on our third year managing a crypto hedge fund. So for most of 2024, we put together this macro and crypto list that I think we navigated pretty well. For yourself, to set yourself up for 2025, I'd find it always best to have as little unknown unknowns as possible, to quote Donald Rumsfeld, of course. So you're trying to game out every possible situation and scenario here that may help or hurt price, that may act as a headwind or a tailwind. If you're an alt enjoyer, if you're an NFT enjoyer, if you're a page 56 coin market cap enjoyer, you may have a different list than me. You want to see the most liquidity humanly possibly imaginable. You want to see max euphoria, right? If you're one of those people. So I don't think we're going to see that in Q1. But if we try to make a new list, I'm certainly less sure of maybe what even goes on this list. We could probably throw energy on this list. We could probably throw taxes in a different way on this list. We've got a debt ceiling fight. We've got TGA. We've got Department of Government Efficiency. We've got Musk versus MAGA. We've got a lot of stuff going on early in Trump's term. So I do think there's a lot of known unknowns, at least until Trump takes office, at least until the first 100 days. Once the first 100 days settle in, I think we can be a little bit more confident on effectiveness of policy, direction of policy, that sort of thing. It's almost to the point where we need to be so bearish on possibilities here that would be the most bullish thing possible, because that would mean liquidity injections, that would mean intervention, that would mean mistakes, right? When mistakes happen, government is made of people make mistakes, but when mistakes happen, BTC benefits. So if you think people are infallible and the government is perfect and central banks are perfect, BTC is probably not for you. But if you don't think that and you want some insurance on mistakes, BTC is a great place to be. Everything other than BTC does very well. The more mistakes central bankers make, the more mistakes governments make. So for liquidity, this could go either way. We're clearly in an upcycle in liquidity, but in the immediate term, not so sure. We have massive dollar strength here in the immediate term, but that may change dramatically once Trump comes into office and policies get enacted. Interest rates could just be here for a little while. I've got people on both sides of the spectrum saying interest rates have to fall way more than projected. I've got other people suggesting inflation is going to reinflate based on Trump's policies. If we look at inflation today, it's at 307 on Trueflation, the highest it's been in quite some time. So you might think and hope inflation is defeated, but on a year-over-year basis, we are starting to rise again slightly. Post-Trump policies, what happens to inflation? A good thought exercise here. The one thing I'm pretty certain about is regulatory and tax risk, at least for unrealized gains tax risk, is gone. Regulatory clarity is here, and this should be a strong tailwind for crypto. I think we should see a stablecoin bill fairly soon. We should see custody rulings fairly soon. We should see continued acceptance of crypto products from the US government fairly soon. Geopolitical risk, we'll find out rather quickly in the first 100 days what's going on with Middle East and Ukraine and everything else in between. As far as Goldilocks economy, depending on who you are, you're doing great or you're doing the opposite of great. And depending on policies enacted in those first 100 days, we should get a strong level set of expectations, at least for the year. So that may mean Q1 in its entirety will just be chop, until we're sure what's going on versus having some tweet at 3 a.m. in the morning or whatever from Trump moving markets, right? That's what you don't want at the end of the day. Most of the time is surprises like that. As far as technicals for crypto, I don't have anything super bullish to say on low time frames. Another reason I'm sitting in so much cash here. It's kind of a chicken and the egg problem. You're sitting in cash because you think markets aren't so bullish, and at the same time, you're hoping for markets to go lower. And if you're sitting in cash, you want to buy lower, right? So as an analyst, you always have to be careful. Am I bearish here because I have so much cash, because I want to be right? Or am I bearish here because that's what the system I'm using tells me to say, tells me to do? Price momentum, we've got none. We haven't had price momentum for a little while now. ETF flows for the year, I think, should be decent. In the immediate term, it's just end of year nonsense at the moment. We'll take a look at those. Main Street attention. We do have some FTX money coming in early Q1, which may help us. I don't know. If you think alt season's going to come and you're bulled up on FTX money and whatever else, right? I'm not going to stop you, but it's not going to pull me out of cash into top 50 coins, top 100 coins, certainly not anything past the top 100. And that's another thought experiment for yourself. Where would you put 10K today? Where would you put 100K today? Where would you put $1 million today, right? Would you put $1 million far down the market cap list today? I wouldn't. That's just me. 10K, fine. I'll put 40K in ETH. Sure, whatever. But 100K outside of the top 100 right now? I don't know about that. $1 million outside of the top 3 right now? I don't know about that. Nice little fun thought experiment. And that also depends on your time horizon, which is another reason why channels like this are difficult, because my time horizon isn't exactly the listener's time horizon. So if your time horizon is 2030, you're going to have different expectations than I do for Q1 2025. Like I said on the regulatory piece, we are going to have so many ETFs and IPOs and products, it's going to make your head spin as far as what I'm seeing coming down the pipe. Now, that doesn't mean they all get approved, but we're going to see the waters get tested here, definitely. The key upside surprise is the strategic Bitcoin reserve. Whether or not we see that, I don't know. I don't know how you can even pretend to give that a probability. At the very least, if it does happen, we are unlikely to sell as a government any more BTC than we already have, which is good. That's bullish. But to buy more or sell gold and buy more, we'll see on that, right? I don't know. I'll be happy if we see it, but if we see it is the real question. What happens when the potential here is, yes, we're going to have an SPR, but we're not going to buy any BTC. We're just not going to sell any. Is that bullish or bearish? I don't know. That's a good question to think about. As far as ETF flows, end of year stuff, a lot of jostling around, a lot of rebalancing. I certainly didn't have high expectations into late December based on the lack of price momentum here. ETH over the past 6 months has certainly picked up in flows, but BTC is where the lion's share has been, and it's been a great year. This is over 30 billion in inflows on the year. And if we compare that to gold, as far as total AUM, depending on how you measure it, we have surpassed the gold ETF, ETP, AUM fairly quickly. And that just goes to show you the amount of access people had to this stuff, which was nothing. It's also important to know that everyone still hates us for the most part, and they don't own any crypto for the most part. So long-term, turbo bullish. As far as the dollar is concerned, if we want to talk about things that could really kill the party, it is dollar above 110. Now, based on technicals, it's hard to fade dollar strength here. I would love for technicals to be wrong and for dollar to go lower. I don't think we're fully safe until sub 106. Just looking at the weekly cloud, would you be bearish this? We're out of the range, we're above the cloud. It's hard to be bearish this. As bullish as positioning might be, and as bullish week over week as this has been continuously, it's still hard for me to fade this. It's hard for me to fade this knowing that Trump wants a lower dollar. We'll see what happens, right? I'm playing the same game you are. I'm watching the same movie you're watching here. But what we definitely don't want is dollar above 110. Dollar above 110, and alts are absolutely crushed, most likely. Alt season is down here. Alt season is sub 100. That's when you have alt season that you've never, ever seen in your life, okay? But above 110, and it's nearly impossible to have alt season. Tailwind, headwind. Back in the range, we can survive. But if the dollar continues to push higher, it's just going to get harder and harder and harder for anything denominated in the dollar to do well. Something else that is important is yields. If the 10-year yield continues to push higher, if the risk-free rate pushes higher, that's going to be a problem. If debt issuance pushes this higher, that's going to be a problem. If this goes above 5%, that's probably going to be a problem. We are very far away from the old downwards channel, like the 40+ year channel we had. If anything, this is a failed head and shoulders, multi-headed head and shoulders. Again, if this was any other chart, not knowing what this is, would you be bullish or bearish this chart? It looks pretty bullish to me, and that's a problem. We are fighting the risk-free rate. We are fighting the bond market getting angry. The bond market is the bedrock of everything. This is the bedrock of all markets. So again, if you're so bearish or bullish in that if we see the 10-year above 5%, then we have yield curve control, which is liquidity injection on steroids, which means central planners lost control, which means mistakes, which means BTC higher, liquidity higher. We're not there yet. We're in this painful middle period where this is still sub 5, but threatening to go higher. And if we look at TLT, of course, TLT is the opposite of yields. And if TLT makes a new lower low, then again, we're so bearish, we're bullish. We get banks in trouble. Again, we get a liquidity injection via some sort of BTFP program or whatever else, yield curve control, whatever, right? It doesn't matter what it is. The options are infinite. The financial engineering is infinite, QE or not QE, as long as it's liquidity positive. BTC crypto will like that very much. The other question is, where's the money going to come from? Where's the liquidity going to come from outside of these mistakes? This is the money market funds total approaching 7 trillion. Is that right? This is almost definitely higher than it was in Q3, probably above 7 trillion at this point. And this is retail at over 2 trillion. It's going to take a lot to pull people out of money market funds, as in rates much lower. So I wouldn't count on this for a liquidity injection, personally. I'll be happy to be wrong there, but I don't think rates are going to really influence money market funds until rates fall dramatically. Now, we certainly aren't going to get liquidity from reverse repo because that's basically drained. This was 2 trillion that we drained back into the system. Because of the debt ceiling issue, because of the Treasury General account being drained and then refilled, right? There's just a lot of influx at the moment. This end of year RRP spike is just probably window dressing, not necessarily anything other than that, but that is in the very near term liquidity negative. So between now and January 20th, it's hard for me to be turbo bullish. And then I look at technicals, which I'll talk about in a second, and they just don't look super bullish to me. You know, it'd be different if we were getting ready to break out of a daily cloud, or we had some pattern, or we had something, just anything, right? I don't really see anything that's super bullish to me. I do have the bear goggles on fully. They're fully fastened. They are bolted onto my head right now. Okay. So maybe I'm just too bearish, but looking at the S&P, yeah, head and shoulders. Sure. Why not? Right. You could say it's not perfect. You can say I'm not looking at the volume. You can say it's not textbook. It's not cookie cutter. Fine. Right. Go long. What do I care? But I'm telling you, based on what I've seen historically and my lived experience, when I see anything that resembles this, generally not super bullish. Now, that of course could be wrong, and this could just shoot higher anyway. Okay, fine. But doesn't look bullish in the moment to me. Target here is not even turbo bearish, right? It's just, what do you want to do right now? Capital at risk, value at risk. I just don't see a lot of reasons to be super excited about prices here just across the board. Before we go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures Inc., PVI, DBA, Kraken. Looking at the old BTC, we had a bit of a pop-up here, but in general, what do I always look for on the cloud? You're looking for the entirety of the cloud to be bullish, and you want to be there the moment it flips bullish. Okay, that's great. We were there on this channel. You were witness to it, all of you, dear listeners. So although we're on the bullish side of the cloud here, the next part of this is, okay, where do we lose momentum? Where do we want to jump in and out? Where do we get a little less bullish? Well, we get a little less bullish when we start to break Williams fractals to the downside. Technically, we have not broken a Williams fractal because the moment we did, we created a new one. So depending on your read there, living through this, right? This was the first level. The moment for me, when we start teasing fractal breaches, I just say, okay, right, we've had enough. We were up 50, 60, 70%, right? Let's just let this thing roll over or not, or go sideways. Nothing needs to happen here. It's just, to me, it doesn't look super bullish. So that's the first step. We lost the Tenkin, the blue line there. Not great. We can't reclaim that. And now we're risking an eventual move through the cloud. I'm always looking for easy risk reward setups, trades. Okay, I don't want to be bearish ever. But if I'm looking for the next trade that I don't want to miss for 2025, it's going to be a move through the cloud on the daily. That may happen in Q1. It may never happen. I don't know. But I want to be there if it does happen. That's it. Doesn't mean I hate BTC. Doesn't mean I sold a single sat of cold storage, which I did not. None of that at all. But if we're looking for trades, this is the next trade I am looking for. Bearish edge to edge. It helps that we've got, again, what I think is a decent case to be made for a type of head and shoulders. Now, Peter Brandt calls this a Humpty Dumpty sat on the wall. I don't know what he's calling it. Slump, bump, hump, whatever. But to me, this whole thing is just not super bullish here. So if we lose 94, not great. Where does this measure to? The bottom of the cloud. Why do I like sub 90? Because of this. Why do I like anything near 80? Because of this. It's not like I'm making numbers up. It's not like I'm just pulling numbers out of a hat. It's always based on technicals, specifically the cloud. So if this price action looked slightly different, if the cloud looks slightly different, I'd change my tune, but that's not the case. I would get very bullish above 100. This may morph into a lower time frame, double bottom, triple bottom, quad bottom. I was talking about this Adam and Eve possibility that morphed into a inverted head and shoulders possibility. I had people getting super triggered that I was even bringing up either of those things. But sure, right? I don't know. It's the end of the year. It's just low liquidity nonsense. Talk to me first full week of January, which may not be till the third week of January at this point, because January 9th is going to be a national day of mourning. Rip Jimmy Carter. So maybe January 13th. Maybe something starts to happen the week before January 20th. I don't know. But I just wouldn't expect anything super bullish up here on low time frames. I would love to see this just break down already. I think Saylor has held this up to the point where we would already been broken down and ready to continue. It's just he's just pushing this up. His executions are awful on his average prices, and he just keeps pushing this up rather than let the market come to him. So I'm not expecting any miracles here on low time frames for BTC. Alts across the board look generally also not great to me. ETH getting into the cloud here has really done a bunch of nothing since early December. Sol in the cloud has looked god awful for a long time here. This could be a bear flag on Sol. Okay, what do I like on Sol? Blindly, if I had to put bids on Sol here and walk away for 6 months, it would be 130. Do I think it's going to 130? I have no clue. Do I want it to go to 130? I don't care. I'm just saying. That's where I would be bidding Sol if I had to. Doesn't look good. And another one I noticed was Link, which, you know, what does this look like to anybody who's spent 5 minutes looking at chart patterns? You tell me. It doesn't look like a bullish head and shoulders, I can tell you that. This would be 13 to 15. So none of this stuff has to break down. None of this stuff has to do anything. But I also don't have to sit in this hoping that things go higher. It just looks like we're a bit tired here and we need some time. We need some time to chop around, maybe drift lower, figure stuff out until potentially February, potentially the beginning of Q2. I don't know. We'll see, right? As far as bull market corrections, we're at around 14% here. We typically max out somewhere 20 to 30. And now, again, I'm not expecting anything. I don't think we need to go reach negative 40% on the drawdown. But more than 14, I think, is a reasonable drawdown possibility, probably to around 20%. It's looking like December is going to close negative potentially, which in my mind is a great thing. We've never actually had 3 months positive followed by a negative December. Never seen that. When we have all 4 months positive, we've had January flat to down. So it would be great to get the down out of the way in December. The next best month coming up for BTC is February. Only 2 months historically have been negative in February. So if we're trying to read the tea leaves and set ourselves up for seasonality, I like February for BTC. For ETH, same story. ETH does best the first half of the year. February is hands down ETH's best month. We don't have as much data for ETH. Realistically, we really don't have that much data for BTC either. But if I had to pick a month blindly, right, and I had to say which month do I want to make sure I'm bullish for, it would be February. It would be March. Those are the two best months for ETH. As far as the high time frame stuff, we're still not to the top of the power law. Up here is like cold storage selling territory. Okay, if we ever get anywhere near this purple line, 300 to 500,000 in 2025, yeah, I'll be cracking the cold storage up there. Okay, probably not to a large degree, but historically a pretty good sell signal. MVRV has actually come down. This is market cap against realized value. It's at around 2.6, which is a great thing. Just like 2016, 17 bull market, the slower this goes, the more pullbacks we have, the longer this can go on for. So it's great. If we pause for a month, if we pause for a quarter, that would be amazing for 2025 for the longer term trend, as long as the wheels don't completely fall off the wagon because yields are 20% or something, right? Like we don't want to see that. But MVRV looks great here. 2-year moving average multiplier is going to continue moving higher just like it did in 2017. The slower this goes, the better. Nowhere near any exit up there for me at all. We've got the cup and handle on BTC. We're nowhere near that exit. Let's say we go to 80, the risk reward on 80 to 180 gets better than it was at 108, then it was at 95. The risk reward from 80 to 300 gets better, right? Again, I don't care where this goes. I just want to make sure whatever I'm doing makes the most sense. If we map this out like the move in early 2024, the TLDR here is we weren't bullish until February. We found reasons to get bearish in January despite the ETF launch. We had GBTC outflows, which really helped that. We had a general sentiment reset that was sort of building up until the ETF launch. And if we have a similar move, that's 160 by March. Now, I don't know realistically if that's possible, but I guess if some sort of SBR announcement occurs, then 160 would be possible. But what am I watching? I'm watching the same thing I'm always watching. Like I said, with the edge to edge, you first want to see a bearish DK cross with price in the cloud. Currently, we have neither of those things. So it doesn't really make sense to quote unquote short here. We have other evidence to me that momentum is dead and dying and rolling over. That's why I'm sitting in majority cash. Where I'd like to rebuy is sub 90, closer to 80. We'll see if I get it. We'll see if I get a chat into Q1. I don't know. But if this mirrors anything like January, 80 would actually be too deep. This is nuanced, but you'll notice we had first a move into the cloud before the TK cross, and then we never got back into the cloud once we had the bearish TK cross. So that's also something to watch for here. But the easiest trade for probably Q2 is going to be a bullish TK cross with price above cloud. The obvious thing that I'm always watching for in any chart. Just because I want this to bounce at 80, maybe it doesn't, maybe, I don't know. I think it will. I think it should. But what if it doesn't? Then what? But 80 is where I'd be comfortable based on the daily cloud. And lastly, the 160 number is from the expected move based on percentages, roughly at least a 50% move, most likely if we break out above the cloud one more time in Q1 or Q2 2025. Now, MSTR looks abysmally awful. As bad as BTC looks, MSTR is almost fully bearish. Fully bearish would be bearish cloud, which we do not have, a bearish TK cross, which we do not have but are likely to get by the end of the week, and price below cloud, which we do have. Your first warning signs were this, November 20th. That was the first fractal breach. Now, you had a lot of people saying, oh man, it's so bullish. Look at this, blah, 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 irresponsibly long. Okay, great. One day those people are going to win. But for now, technicals win, just like they won in March. And to have been bearish since late November has been the correct quote-unquote call. I liked this at 180. I liked it a lot less above 300. The technicals were correct. So the next thing to watch here outside of BTC and on MSTR would be bullish TK cross, price above cloud. Ideally, this fully resets, meaning we go from bullish to bearish to bullish. We probably don't see that until Q2, which I'm totally okay with. If you have 4 amazing trades a year, what else do you need? If you can nail one great trade a quarter, while your losers lose a lot less, you should have a great year, assuming you sized those trades appropriately. So I don't want to make a ton of trades. I just want to make sure the trades that I do make have very positive winners and the losers are minimal. So yeah, this is a no-go for me until this is fully reset. Essentially, it's probably what's going to happen with this, but momentum completely dead there. This is a look at the multi-year pitchfork, which again was correct, calling, hey, get the heck out of this thing. You're way out of the bounds here. So if for whatever reason we get below the midpoint, I like a long there. I don't think we're going to get back to 175 in 2025, but that would be the next level to watch if things get very, very bearish. And if for whatever reason the premium to NAV drops negative, if we get a discount to NAV, love it. Okay, I don't think that's going to happen until full bear market 2026 type stuff, but it could temporarily, theoretically happen if you get some overreaction in MSTR. Not something I'd be waiting for, but something to consider. And just comparing that MSTR chart to the BTC pitchfork, same story. This wasn't a secret. We talked about this before it happened. It's just based on the pitchfork. The interim top is very similar to March, the same spot in the pitchfork for BTC. WGMI miners have been a mess, as delusional perhaps as the MSTR folks have been. The miner people have not had a great year just because it's been very painful, very noisy to sit in this. This is the mining ETF. Some miners worse than others, but as a group, much like MSTR here, I don't like this sector until technicals are bullish again, or all the way bearish down here in the red diagonal zone of the pitchfork, the buy zone, the sell zone. Right now, it's just a bunch of chop. ETH, we talked about. 2800 is just a level based on back here where we wicked into. I wouldn't want to see this much lower than 2800. Ideally, if you're bullish ETH 2025, we see what? We see in-kind for ETFs, which will be huge. That'll mess up on-chain activity big time, but whatever. And you'll see staking in ETFs. I don't think that's some sort of magical panacea to get assets. I think it's bullish for the ETFs. We'll see if it's bullish for ETH. It certainly should be. It should be less bearish than whatever's going on with ETH now. But to say and expect you're going to get some mega inflows just because of staking is silly. You still need something, right? You need something. And if ETH is competing with multiple staking ETFs, multiple other ETFs that offer staking, that could be an issue for ETH as well. Another trade I don't want to miss in 2025 is ETH BTC potentially bottoming. On lower time frames, this looks like a inverted head and shoulders variant, let's say. Daily cloud looks good for ETH BTC if we go back to Kraken. ETH BTC on the cloud here, the setup looks phenomenal. Phenomenal. Again, when does ETH do best? First half of the year. What's coming up the first half of the year? Okay, great. February, etc., etc. If this gets above the cloud, great. It's going to do best if the dollar isn't 110. It's going to do best if all the other potential headwinds quiet down. It's going to underperform if the dollar continues to strengthen, if there are other issues, right? But the technicals are fully set up for an amazing February, again, for ETH. Not something you want to miss for the quarter as a trade. So right now the setup looks good. Anything above 037, the cloud loves it. Anything closer to 039 and the pattern loves it. And then anything above 04 and it's a full breakout at that point. Stop losses here would be any new lower low beyond the right shoulder, which isn't even fully formed yet. This pattern could fail. This whole idea could fail. Everything about this could fail. We're in the early stages of the embryo of ETH BTC bullishness forming, okay? But if we start to get over here, then you'll hear me talking about it a lot more. Definitely something to watch into late January, early February. But so far, so good on that pattern. Sol, like I mentioned, 130, I like that level. Maybe this breaks down as a bear flag, maybe it doesn't. Maybe Sol gets an ETF, maybe it doesn't. I think it does in 2025 at some point, but we'll see, right? Just like ETH, it's not like, ETH was turbo bullish post ETF. It wasn't. Now, ETH was dealing with outflows from ETH. Sol, I don't think will be dealing with as many outflows from Grayscale products in that regard. But this does not look like a bullish chart. on trend at all, right? What do we want? Price above cloud, bullish TK cross. What do we have? Price in cloud, bearish TK cross. This is nothing that I'm touching ever. And another trade I'll certainly be talking about more if and when it happens would be Sol BTC. Maybe this is a cup and handle, maybe it's not. This ascending triangle seems to have failed. Maybe this follows the path of ETH BTC, where it looked like it was going to break out, doesn't, fails, breaks down, doesn't make a new high, and then breaks down again in like 2026 or something. I don't know. But this idea is definitely on the back burner until Sol is back above those horizontal levels where it's making new highs. I don't own any Sol. I do own some ETH because I do like the ETH BTC chart. And beyond 07 into 08 is probably unlikely for ETH, but we will see. I don't know. Again, I'm watching the same game you are. My expectations here are just based on the measured move of this pattern. And this is a great trade. It's a great trade not to miss. Potentially 20, 30% in Q1 where maybe BTC is just kind of floundering around, right? I don't know. We'll see. But those are the setups that I see. Those are the trades that I like. This channel's been around for a few years. It's going to be around in 2025. Give me a like, dislike, comment, share, subscribe, and happy trading.